Hi, I'm John Stevenson, the Guaranteed Retirement Guy. Today we're going to be talking about the top annuity companies right now. Okay, so if you're looking for a MIGA, a SPIA, DIA, QLAC, or even an income rider, or maybe you're just looking for some growth and you want market protection from a fixed index annuity, then let's talk about the top companies right now and maybe where the best rates are. We could talk about renewal rates for participation and cap rates if you're looking for the highest growth for an indexed annuity. And we can also talk about income riders and the best companies to work with for that. All right, so I'm going to share my screen because it's really best to go over this visually so you can see what is out there right now. And I have a lot of experience with these companies, and so I can just give you the ins and outs of all of these companies, okay? So you'll notice there is a lot of companies, and I'm going to start with the income rider. These are attached to fixed indexed annuities, and an income rider gives you guaranteed income. And so this is just a very simple illustration. This is someone from Iowa, $200,000. It's a single payout and it's immediate payout at age 56. So not a lot of income, but $12,720, that's something. That's from Athene. And I'll talk about immediate payouts. Obviously, if he was to wait, if he was to defer this 4 or 5 years, the income would be a much, much higher amount. Okay. But let's take a look at these companies. So Athene is a great company. They're over 100 years old. They're A+ rated. They have a high Comdex score, and they are known for bailing out companies that are going through hardship. Okay, so they're a solid company. If you're looking for strength and you're looking for size and you're looking for safety, then Athene is it. All right, so the next one is Prudential. There's not much to say about that because most people know who Prudential is. They're very well known. They're very strong. They're A+ rated, and they've been great to work with. The next one is Corebridge. Corebridge Financial is A-rated. They've been around for 100 years. They own AIG. And a lot of people, when they hear AIG, they hear about the bailout and they're like, oh no, what happened with that? Well, you have to remember when that happened back in the, in the crisis, 2008 crisis, what happened was their parent company was having issues. The actual annuity division, like that was his own company, and they were just fine. They were thriving. Okay. So you had to remember when you hear about this bailout, it was a completely different company and it was the parent company. Okay. So AIG was great and phenomenal. This was actually before Corebridge Financial bought them out. All right, next one is Ameritas. They're great. They're A-rated. I work with them a lot, and they've been around for 100 years. All right, the next one is Allianz. Allianz is known as the largest annuity carrier in the world. Okay, they've got headquarters in the U.S., headquarters in Germany, and they have over $3 trillion in assets. So I have clients who reach out and they want to place $1 million into one contract. They feel very, very comfortable putting that with Allianz because they are so big. It doesn't mean that you can put $1 million in any contract with any company. There are other great companies out there that none of these companies are going to be as big as Allianz. But at the same time, people just feel better when they have a larger company. So if you want the biggest and the baddest, choose Allianz. All right, the next one is Gillico. This is known as Guarantee Income Life Insurance Company. They're A-, but a solid carrier to work with, especially if you're looking for immediate income. A lot of times immediate incomes or payouts are much, much higher than others. There was a time last year where they were beating everyone out. So a good company to work with. I worked with them quite a bit as well. Okay, Midland National. I love Midland National. They are a sister company, and you'll notice down here, a sister company to North American. They both share similar logos, and it's just because they are both affiliated with Salmons Financial. Okay, both A+ rated, both solid companies, and both well over 100 years old. The difference between Midland and North American is you'll notice, and that their incomes are the same, so that's not a big deal, but the nice thing about Midland, like if you purchased a policy, any normal annuity policy, especially if you're going to take income and you want to defer it out, with the income riders, you got to wait to the anniversary for the roll-up rate to hit. And that's what gives you higher income at every anniversary period. So if you wait 2-3 years, you're going to get the highest income after the 3 years. You want to do 2 years and 11 months. Now with Midland, it's different. Let's say you were to purchase an annuity with Midland and your birthday was a month later. Well, instead of waiting a whole year for the first anniversary to hit, they actually count your first birthday. So let's say you've got a birthday 1 month from now, you purchase a Midland policy, and then your birthday happens in 1 month. That's seen as one anniversary, 1 year. And so if you look at that and you think, all right, well, if I'm going to defer out 5 years with another carrier with an income rider, I got to wait 5 contract years, okay? 5 12-month periods from the date of issue. With Midland, it's 5 birthdays, okay? And especially if your birthday is anywhere close to the issue date, you might be taking income 6 months early. Or if it's if your birthday is right after issue date, you might be taking it a year early, okay? So pretty cool when you're thinking about wanting high income, but being able to work with a carrier that will actually give it to you a little bit earlier. Okay. So sometimes that is a good thing. Sometimes other carriers, will still beat out Midland and it doesn't make sense to use them. But a lot of people like them. They have a very, very high Comdex score. I want to say as of the recording this video, it's probably 96. So, which is really high, 96 out of 100. So A+, high Comdex score, been around over 100 years. When you're looking for solid carriers, they're absolute. And North American, same way. NASA, they're B++, but they also have been around over 100 years. You just have to remember when you're going into the B category, it's just seen as higher risk. So what you want to think about this, and I work with them as well, is when you buy an annuity, and depending on the state, you will have a state guarantee association that will insure your premium, usually up to $250,000. Okay, so if you're well under that and willing to take a little bit of risk, and if they're giving you a high rate of return, especially with their MIGA contracts, sometimes they can beat out other companies. Then there's no wrong. In my opinion, that is not a bad idea if you were to go in and purchase a contract with a B++ carrier. Okay, all right. So F&G. Fidelity and Guarantee. No, they are not Fidelity, but they are a solid annuity company. They've been around for about 60 years. And I've worked with them a lot. They usually have very high payouts for immediate, depending on the state. Now for Iowa, they're not the highest. Okay, so I could change states and this list might move around. So they're a good company though. I've worked with them a lot. They've got great customer service, easy to start income. They're just a good company to work with. Global Atlantic, they're solid as well. They're over 100 years old. Aspida is A-. They're solid, but they're new. Okay, they've been around since 2022. And what I mean by been around, the annuity division has been around that long. The actual company has been around a lot longer than that. Okay, so the company that's actually backing them is worth $500 billion. So they're a solid carrier, but some people who want a little bit more experience, carrier that's been around longer, then choose companies like North American, Midland, Allianz, and some of the others. All right, Mass Mutual, A++. So you might think, A++, they got to be bigger than Allianz. Well, they're not. They're a lot smaller, but the A++ rating is just because of their long experience and their ratio with their debt, with their assets, just how their balance sheet looks. Okay, so they are pristine as far as risk. But look at the income; it's $10,000 versus 12.7. Okay, so if you spread that out over 10 years, that's quite a bit less in income if you look at it that way. Okay, so it's like $22,000 less in income. All right, so go down a little bit more. We see Nationwide, they're A+. They've been around since the 80s. Atlantic Coast, I have not worked with them a lot, but they're a solid company to work with some of their growth products. And they haven't been high on the list for the income, as you can see. Penn Mutual is good. They're A+. They're usually best for the SPIA contracts, and I'll look at those. I'll show you those. But they're a solid A+ company as well with a high Comdex score. American Equity, I work with them a ton because they're better for deferring. Okay, especially when you're deferring out like 15 or more years, they usually are on top. So they're not the highest for immediate, but they're great if you want to defer out and get a high payout from a relatively low premium. Okay. All right. So we went through that. I'm just going to push this out just a little bit more just to give you an idea. Let's say I push this out to 65. Okay. $200,000 Iowa, let's say you take it out of your 401k and you transfer it into an annuity contract with, within an IRA, you're going to get more income. Okay. And you can see from this, it's a lot more. Now it goes up to 28,000. Who's on top now? It's Midland. Okay. Remember the birthdays? They're counting the birthdays, not the anniversary years. A solid company to work with, okay? You got North American, you got Corebridge. These are the top three, okay? And then you go into National Western. I do work with National Western quite a bit too. They have some awesome products, especially when you're looking for high income, depending on the state. So they can outperform other companies in certain states versus another, okay? All right. Now we go down the list, you can kind of see some of the same carriers. You can see some of these, like American Equity, is starting to rise because the longer you defer out, the better they are. Okay, let's defer this out to 76. Let's just do 20 years, okay? That'll give you a nice, solid example here. So same $200,000. Let's say that person just wants to wait. They're just thinking, you know what? I'm gonna have some pension income from here. I'm gonna have an annuity contract here that's gonna give me income earlier. But this one, I just want to I'm just going to use it to give me a raise. Okay. 20 years down the road, I want more income from this. Okay. All right. So if you look at that, American Equity beating everyone out. Do you know why? It's a 6.5% roll-up rate for 20 years. So it's a lower roll-up rate than other carriers in the beginning. That's why there's other carriers that are better for immediate and up to like 10, 15 years. But when you're looking for long term, okay, 6.5 roll up for 20 years compounded, that's pretty huge. So, and when you look at the income, wow, $61,551 for only $200,000. That's awesome. What if you take that out for 20 years? You're taking out $1.2 million from $200,000. That's pretty good pension, huh? All right, then you got Athene. Athene's pretty good, but they're not close. I mean, the gap's pretty big. Corebridge, F&G. So middle is not bad, but look at that. They're not great for long-term. 37.6 versus 61.5. Yeah. So different annuities work better for different time periods. And of course, it depends on the state as well. Okay, so these are great companies. I have a lot of experience with these companies, and I can help you. If you're looking for an annuity, book a call. There's a link below, and you can go to my calendar, and we'll hop on a Zoom call, and I'll show you everything that's available, okay? You go to my website, johnstevenson.com. That will actually allow you to book a call there as well, okay? You can check out my annuity calculators. That will help you kind of get some numbers so you can do your own research as well. Okay, so real quick, before I end this video, I wanted to talk about some of the other companies, especially for MYGAs and SPIAs, okay? So I'm going to go right over to the SPIA calculator, and I'm going to just be pretty quick on this. I don't like my videos to go too long, but I wanted to just really cover the top companies for this. A lot of these are the same companies, but you'll notice here, remember I talked about Penn Mutual? They're not so great for the income rider, okay? But when you're looking for monthly income, and this is immediate, okay? This is immediate income, and it's not going to be as high as an income rider. You'll notice that, let's see, monthly income is $11.24. So $11.24 times 12, $13,488. So in this instance, it's actually a little bit higher than the immediate that we were looking at before. So going with a SPIA is great. So you got Penn Mutual, you got Athene, remember they're solid, absolutely solid. You got Mass Mutual. So top three right there, very, very close. Mutual of Omaha is a top contender, so is Integrity Life, and so on. You got a lot of different companies to work with. A lot of these are the same companies. Prudential, you can see American National Insurance Company. We call them ANICO. Solid company, especially for MYGAs. And you got all the way down to Sagicor. And Sagicor is popular too. I've had Sagicor outperform all of these companies in different states and for different ages. So it just depends on you, your birthday, exactly when you want to take the income. All of that matters. Okay? All right, so let's check out the top MYGAs. Now, I'm not going to show you the hundreds that are out there. If you want to go to my website, johnstevenson.com, you can see the MYGA rates, and you'll see hundreds of them for every single term possible. So if I look at these, this is just taking the top three out of the hundreds that are out there, and this is for each term. So you can see the 2-year. Exonic Insurance, they're actually pretty decent to work with. They are A-, but solid company to work with. Ocean View, solid. I work with them a lot. And of course, Aspida, they haven't been around the block for a long time, but they're solid to work with as far as rates. Okay, Ohio State Life, I've never worked with them. Okay, I've never gone down below B++. So I don't think there's anything wrong with working with them, but you just have to, what I would do in this case is keep your premium under the state guarantee insured level. So if it's $250, keep it under $250. Okay, if you have more than that to invest, then spread it out. Okay, and in this case, if you have $500,000, spread it out from Ohio State and Exonic if you're going to do the 3-year. All right, so you got 4 years, Ocean View, Nassau. Remember I told you Nassau was very competitive for the MYGAs. Yeah, they're 100 years old, but they're B++ because they're a little bit more risky. But 4-year term, that's not that long to put it on risk, especially when they've been around for over 100 years. Americo Financial, they're solid. I've done a lot of MYGA business with them, especially when the interest rates started going up. They were beating everyone out, and they're great. They're easy to work with, and I highly recommend them. SBLI, they are special because they're out of Massachusetts, and they actually were the only company that allowed me to sell MYGA to someone who is in New York and use an out-of-state form. Okay, so if you're in New York, SBLI is a great company to work with because you're probably subject to whatever carriers are available in New York, which the highest one that I've seen in New York was National Life Group. But when you compare the 5.6 that you can get with SBLI versus the National Life Group that's paying I think 4.9 last time I checked, big difference, right? You can buy it in New York, or you can buy it with a company who's willing to sell it to you out of state and be able to actually get it done legally. A lot of these companies just won't do it. Okay, but SBLI will. Exonic Insurance again, American Life. I'll just be honest, I've never sold an annuity with American Life, but they're a solid company as well. They're B++. They just haven't been on the scene until now, and so when they start getting more competitive, guys like me start looking into them more, and we start researching them, and then we will recommend them if we feel that they're appropriate. Okay, Ocean View, Nassau, American National, 6-year. Okay, let's see, Nassau, Heartland's good. They're B++, but I've sold a few policies with them. They've got excellent customer service, excellent rates. They were beating everyone out a few months ago for the 10-year, and good company to work with. I highly recommend them. Yeah, they're B++, but I still think you're in solid company when you've got your money with them. Okay, 8 years. Equitrust was the leader in MYGAs for quite some time. They're not in all of them right now, but you can still for 8 years, they're higher. And they're a solid B++. They're actually A-rated with 2 agencies, and AM Best has yet to rate them an A. And so once they get that A status, they'll be A status all across the board. So good company. Clear Spring, great to work with. I've done a lot of business with them, and I've done a lot of business with Oxford. I would say my experience with Clear Spring and Oxford have been very similar, and they're both solid companies to work with. Okay, 9 years. Liberty Bankers. Yes, Liberty Bankers is good. I just sold a policy with them a couple months ago, and they've been easy to work with, and they've offered great rates, and definitely A-rated, so A-, still a solid company. Okay, 10 years. Ocean View, Farmers Life, and Heartland. I've never sold Farmers Life. They're a solid B++, but I don't have personal experience with them because they have not been the highest one for a long time. Okay, Heartland National, of course, you can see they're still in the top 3. But Ocean View, if you can get the top rate and an A-rated, well, it's kind of a no-brainer. So you'll notice that the withdrawal rate, there is none in the first year, but after that, in years 2 through 10, they'll let you take up to 10%. So, and I'll just show you real quick the calculator, just so you can kind of see how these earn over time. All right, 5.65. So 200,000 earns 11,300. In the first year, and then it compounds after that, and so on. So you can see over the years, it compounds. By the time you hit year 10, it's gotten 327,986 multiplied by a 5.65, earning you a final $18,531 to give you a total of $146,517 in earned interest. Excellent. Then you can take that money out, spend it, or you can roll it over to another contract, keep it tax deferred. Even if it's a non-qualified, you can do that as well. Or you can roll it into an income product. But I would just advise you, if your sole purpose is to take income with this money later on, usually an income rider will pay you more, and you'll be better off buying that right from the beginning than letting something grow in a MYGA and then rolling that over to an immediate payout. You'll usually still get a lot higher if you stick with the income rider first. So just remember that. You can go throw your money in a MYGA, and I think they're great. They give you a lot of flexibility to do something else with the money later. But if you know you're going to take income, consider the income rider first, okay? Because you're going to be better off financially and with higher income by going that route. Okay. All right. So that's it. I just wanted to kind of cover some of these companies because a lot of people are looking at these insurance companies and they don't have any experience with them. Maybe your advisor's sharing this one company that he really, really likes. He has a lot of experience with, and he's just comfortable selling them. They might be a great company, but the rates might be low. Okay. Or they might be paying him high commissions. They may be paying him, extra basis points, extra bonuses, maybe going on trips. Unfortunately, a lot of agents work that way. I had someone reach out to me yesterday, and he had an agent that was product pushing. He loved North American. It was great. And he was like top guy, and he just kept pushing. And it just wasn't the highest payout. And it was the best deal for the agent and not for the client. And so North American's great. I mean, I work with them a lot. But if they're not the highest payout for that client, and that's what that client's looking for, I'm not going to sell it. I'm not going to tell them to do it, even if I am going to get higher commission. Okay, so you have to make sure you're working with someone who's in your corner, who's going to be there to answer your questions well after the sale, well after he makes his commission. Okay, that's really, really important. So I hope you feel comfortable booking a call. And if you do, there's a link below the video. And of course, if you want to go to the website, johnstevenson.com, and you want to check out the annuities that are available, check out my calculators, okay? They are there and they are updated every day straight from Canex and Annuity Rate Watch. So I hope you enjoy the video. I enjoy educating. I enjoy selling annuities. If you book a call, I'm not going to try to sell you anything. I'd love to help you if that's the way it goes. But at the same time, that decision is yours. So again, thanks for watching, and we'll see you next time.